and welcome. This is Mary Ellen McGonagle with the MEM Edge Show, where each and every Friday afternoon we bring you where the action is in the broader markets. A lot going on this week, so let's go ahead and get started. I'll share with you our agenda. We're going to go ahead, as usual, take a close look at the current markets. Where are we? Always with an eye toward anticipating going forward, not just next week, but beyond, so that you can prepare to either be defensive or take advantage of the action in the markets. A lot going on. Certainly earnings season had a very big week. We're going to review some of the higher level type stocks that reported. Also next week it ramps up even further. Lots of super large cap names that are due to report. But again, we're going to focus on those that reported this week so that you can get a feel for how the markets are responding to these companies that are reporting. And again, with an eye toward preparing you for next week's big earnings impact. Also, growth stocks are continuing to shine. Lots of momentum. It's not just every name, it is selective. We'll get into that, as well as looking at the move into small cap stocks. Small cap stocks have been languishing. They're starting to perk up. So there are some areas that we can go ahead in that small cap space and take a look at. Before we get into all of that, I'd like to share some of the more important news this week to bring you up to speed. We did see a huge, tremendous drop in oil prices. Began on Monday, a little bit of recovery, but still down 40% for the week as storage facilities are lacking, while production was still a little bit too ramped up given the significant drop in demand for oil. The House did approve a $484 billion additional stimulus package for small businesses on Thursday. Very significant there. We did get the unemployment numbers. Another 5 million workers filed for unemployment. That brings the total number to 16% of those that were employed going into the lockdown. So a very significant number there as well. Durable goods orders came out today. A huge drop in March. So these significant headlines, as well as talking about this unemployment, by and large, not great news. But again, we are seeing a market that has really tremendous resilience, as the ability to climb that wall of worry for select areas remains pretty much in place. I would argue that this aid package has a lot to do with it, a lot in the way of funding and helping support the essential collapse, if you will, of many small businesses. So let's go ahead and from here, just take a look at these broader markets. And again, you'll see what I'm referencing. This is a daily price chart of the S&P 500. Each bar here does represent 1 day of trading activity. And here we are with this week's action. A little bit dicey, certainly not uncalled for, given that unprecedented drop and shock to the oil markets. And we can see that we did break back below some of these key simple moving averages. And I'll explain the relevance here from my work. And we can go back here certainly to this more ascending bullish phase back into the beginning of late February into March. And we can see the index at that time was trading up above this shorter term 10-day simple moving average. Very nice bullish phase. And again, we can go back to other periods where we've had corrections and pullbacks and breaks below that 50-day moving average. This is a moving average that a lot of institutions pay attention to, so I would call it the line in the sand, so to speak. And of course, during this bear market phase, we crashed through all of these simple moving averages, but the first signal of a bear market rally was following that March 23rd low, the break back above this shorter term 10-day simple moving average on big volume. Those that paid attention and were not we're okay with that. A lot of the people with my MEM Edge report, we were able to add some stocks on this significant downtrend reversal. And then the next area of possible resistance is this red 50-day simple moving average, a break above that bullish with an eye toward the next area of resistance being the 200-day simple moving average. So we did bounce around a bit. The good news is we ended the week back above that 50-day simple moving average, not in an entirely convincing way, but we certainly did. Green 10-day poised to cross up through the 50-day. That is a golden cross. All of this activity is with an eye toward eventually pulling up these longer term moving averages. So at some point in time, we get these nice upward trending bullish phases. So that's where we are currently. The RSI is positive, as are the stochastics, both momentum indicators trading above their net neutral in positive territory. Near term uptrend intact, but it is very selective. We're going to get into that. One other index that I wanted to share with you is the Nasdaq. The Nasdaq has really been a leadership group. It was a leadership group going into the bear market, and subsequent to these lows in March has really had a nice significant advance. It has had broken up above the 50 and as well as the 200-day, this nice golden cross, shorter term simple moving averages moving up above. Longer term, we can see that the RSI and in this case the MACD are both positive, but by and large the NASDAQ is the leadership area, and we will go ahead and get into that. As we do, we are going to drill down beyond these broader market indices and take a look at some of the underlying sectors, because as mentioned, the markets are having a near-term bear market rally, but it is rather selective. There is a feel of the haves and the have-nots. So here we have those 11 sectors as well as the S&P 500 in what are called candle glance view. This is a 2-month daily price chart of those various sectors. I've gone ahead and overlaid that RSI indicator, and then in descending order we want to see where that strength is with an eye toward capitalizing on that strength. Here we see healthcare up here in the forefront. This is something that we've been identifying for the last at least several weeks. Significant. Take a look at this relative to just quite simply that S&P 500. Very bullish break back above all of those simple moving averages. We're well advanced as far as this golden cross bullish signal continuing to point to an uptrend in healthcare, two very select areas among healthcare. We're going to get into that. It is all about not only coronavirus, but also the growth prospects outside of that for some of these bigger healthcare companies. Consumer discretionary. Now, I would tell you that Amazon is a big part of the move into discretionary stocks, but also this week in particular, there are other areas that are joining this move, other retailers that are starting to crop up, starting to turn a bit bullish. So very interesting in the face of increased unemployment, but a lot of people would point to those stimulus checks. But interestingly, we'll go ahead and take a look at some of those stocks with an eye toward potentially fleshing out how much more of an advance some of these discretionary retailers have ahead of them. XLC is the communication services. This is all about internet related stocks. As you can imagine, we're in lockdown. A lot of internet content companies here that are seeing improved or increased traffic. So that's helping that group. And then technology. And technology is not necessarily at the forefront, but there are growth areas that we are going to get into among tech that are really leading the charge. So then we can drill down. Staples did not have such a good week. It was down about 4%, actually 3% on the week. But we are still bullish overall. A couple of companies came out with numbers that were not particularly bullish. So we will get into that. And then as we drill down further, we can see other defensive areas that are really languishing. This is the real estate REIT XLRE, that group was down 4.3%, and utilities dropped 3.6%. So defensive areas not really seeing a lot of traction, and a lot of this really has to do with the outlook. It's not because defensive areas are not working. Quite simply, utility stocks with the clampdown and lockdown, these companies are not using or needing as much in the way of energy. And then the outlook and prognosis, particularly for commercial and hotel type of REITs, is not bullish. So that is the standing there. Let's go ahead and take a look at another view so that we can really, again, capitalize on where the strength is and get your arms around that. So what we are looking at here is, again, that candle glance view, and I've gone ahead and added the Russell 2000 as well as software semiconductor stocks. We also have biotech. These are areas that I am always on the lookout for. They do tend, when they are working, are going to put you in front of faster, higher moving types of stocks. Their growth profiles tend to be higher. So in addition to other areas of the market, I do like to stay on top of where those semis, software, biotechs, and so on are, how they're doing. So again, that RSI indicator and in descending order. Take a look. No big surprise here, but biotech stocks up here in the forefront, barely touched by the earlier sell-off that we saw in the broader markets. This has everything to do with a number of these biotech companies that not only are in line and working with larger pharmas to uncover coronavirus treatments, we are also seeing cancer and other disease-related treatments that are being pushed through, and that is quite bullish. Defensive area because the treatments are still needed despite any potential economic recession. And then gold up here, gold's had a good week. It's not an area that I specialize in, but it's certainly worth noting. We're seeing a lot of traffic here in these gold stocks. It would be an area, certainly if you were interested, I would say that gold is very much in a confirmed uptrend. So then we have the Nasdaq composite I talked about being a leadership group. Let's take a look. IGV is an ETF for software stocks. Nice bullish break above each of these simple moving averages, certainly earlier than, for instance, the S&P. So in a nice confirmed uptrend. And a lot of this is these cloud computing software companies that are needed to keep those individuals in lockdown connected, both for work-wise and otherwise. And then semiconductors, the fourth leading as far as these groups that I am covering and looking at quite closely. This is semiconductor stocks. Now, semiconductor stocks did see a very sharp sell-off earlier this week. Certainly the collapse of oil pricing and the sense that certainly economically we could see a prolonged downtrend potentially in semiconductor chip demand, but they bounced back really sharply. So very bullish action here, but bearing in mind that it is a bit of a volatile area, but there are growth sections in semiconductor that this is another haves and have not area in the markets. And then as we move on, we can see moving further down, I talked about IWM is the ETF for small cap stocks, the Russell 2000, not looking overly dynamic, but certainly starting to get a bit more bullish with the RSI dipping up above this net neutral 50 and MACD just poised to turn positive after this March 23rd low. But again, you can see relative to the Nasdaq, relative to the S&P, small cap stocks by and large are languishing, but there are bright spots, and I'll show you how you can get in front of that. We're going to take a very brief break. When we get back, we have lots more to cover. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I talked to you about this being a very rather relevant week within earnings. And in particular, we did see a number of well-known companies that reported. And I think it's important to review the market's response because you will see a theme or a pattern emerge that can help set you up for the many large cap names that are due to report next week. So this first stock that we're looking at is Chipotle. CMG is the ticker symbol. This gap up was in response to very strong earnings report. In response to that, this is something that you would certainly see in a more bullish phase. Tops earnings and sales, gaps up, and continues to advance further. 3 different Wall Street firms upgraded the stock, but the reasoning or why this company had such strong growth even going into earnings was because their significant increase in digital sales. Digital sales are up 80% year over year. And this is a company that over 3 years ago started to make moves into advances in their digital sales space. So going into this bear market, leadership, everything to do with that. So they came accidentally, if you will, prepared for this lockdown. They've started all kinds of new services beyond digital sales. You can order online and just drive through a select lane, pick up your order, and you're good to go. So Chipotle, very nice uptick here, but most importantly is the fact that the company was positioned prior to this lockdown to take advantage of individuals that are ordering online and taking delivery. So CMG is one, but we can also look at another company in this same space. They had good numbers, but the stock did not advance as much. This is Domino's Pizza, DPZ. We can see a little bit of a pullback here following this nice move on earnings. And the reason for this more recent pullback, it's still in good standing in an uptrend above this 10-day. However, the company did have to reduce their growth prospects because a lot of their growth was centered around a huge, I believe 25,000 stores they were looking to open by 2015, and due to construction slowdowns, supply chain issues, that's going to be pushed back. So we did see the company pull back. I would argue also that the company going into earnings was really priced for perfection, very close to a new high. But again, still in an uptrend, but not a continuation of that gap up on earnings. Let's take a look at another larger retailer. This is ORLY, O'Reilly, ORLY is the ticker symbol. And these, they are a specialty retailer of auto parts goods. Their earnings and sales were above estimates. We can see the stock gapped up. The company's price outlook was upgraded by analysts to 435. It's currently trading at 385, so that's a significant potential improvement. But you are going to want to see this stock break back up above this 200-day simple moving average before I would argue it could advance much higher. RSI is positive, as is the MACD. Now let's take a look at a large cap defense stock that did report this week, and there was a smaller one as well. We have another big name reporting, Boeing, as well as others that are due to report next week. But you are going to want to see or bear in mind what went on with Lockheed. Lockheed did report excellent numbers. They beat their earnings estimates, but take a look at this pullback. No continuation rally on that gap up, and it has everything to do with supply chain issues that are going to really reduce their ability to produce even if they have existing orders in place. And they did also lower their revenue outlook because of those supply chain issues. So keeping that in mind, again, Boeing next week, Northrop Grumman, General Dynamics due to report next week. Let's take a look at another company that reported this week. This is Thermo Fisher, TMO. We can see the nice uptick followed by a pullback. And this is all about that continued volatility that we are experienced by and large in the market. But they also reported above estimates. The current price is at 328. The price targets go as high as 383. But the company did report very strong earnings because of their involvement with biopharma and COVID. So keep an eye on this one, bearing in mind historically that it can be a bit volatile. Let's take a look at a semiconductor stock. I talked about that area. We've had a number of winning stocks in this area on my MEM Edge report, but it's going to have everything to do with what area of the economy is that given company providing semiconductor chips for. This is not on my list. It is a laggard, Lam Research, LRCX, and the company actually missed on their earnings and revenues. And despite that, they are reporting that customer demand is remaining strong for their chips, but they did miss. The strong demand comments are part of what helped other more leading semiconductor stocks do well. Another company that came out, bigger name among the medical space, is Edwards Life Science. And we can see that they did come in, they did have a initial gap up on their report, a nice bullish break back up above this 200-day simple moving average. They did come out with earnings and revenues that were above estimates. However, for 2020, they are anticipating at least $500 million in cuts to their revenues. So it'll be interesting to see if they're able to retain this more recent bullish stance. We can also look at another company. This is one that has been on my MEM Edge list. We were able to, we had it on back here, nice significant advance going into the bear market, removed the stock, but we're able to put it back on upon this bullish break back up. This company did report their earnings this week. They're up about 14% on the week. This nice gap up and a continuation rally. The company provides injectable drug systems. They had 36% in year-over-year earnings growth, 23% above estimates. My point with this is the fact that we are seeing these type of really bullish responses. If it's a company A that's coming in ahead of estimates, B, they provide a needed product such as injectable drug systems, and also they are coming in above estimates. We've also are seeing analysts raise estimates subsequent to the report. So if you are someone, earnings from my work, certainly with William O'Neill and Company, earnings is going to be that primary driver. So if you can get either in front of or certainly even after, we can see the stock had a continuation rally the following day as pent-up demand. Another one that we identified for our MEM Edge list that reported this week is Eli Lilly, LLY. It's one of what I would call the four horsemen among pharmaceuticals, in the sense that they are seeing increased COVID-related sales, in addition to a lot of people, individuals, you may have read that they are stockpiling toilet paper. They're also stockpiling prescriptions. So a lot of these large pharmas are seeing a really increased pickup in drug sales. Eli Lilly crushed expectations. They raised their annual guidance because they are seeing pickup in their other drugs, not just COVID related. So they're at the end of May, they are due to pick up on human trials of a treatment of an antibody. So a lot of bullish items going on for Eli Lilly. So again, in the right group and looking quite significant. So let's go ahead and take a look at companies that are due to report next week, see if we can uh, get a sense of what may occur. And going into some of these, let's take a look at Amazon. For instance, they are due to report Wednesday after the close. We can see it's already had a significant advance, primarily because they are seeing explosive online retail sales, and of course everything to do with the lockdown. But let's take a look, because we can see that the stock more recently has been marking time, if you will. So I'm just going to see how my drawing skills are here, but I would argue that this week's action is a high tight flag formation. Of course, by and large, you generally are not served to buy going into earnings, particularly given the current volatility in the markets, but just making note that there is a bullish formation going into their report at the end of the close on Wednesday. Let's take a look at another well-known company that is due to report next week. That's Tesla, and Tesla has been in the news. But what I did want to point out to you with this particular company is take a look at their prior earnings reports. And of course, this is during an entirely different economic period, but the company does have a history of gapping up after reporting strong numbers. More recently, they are languishing. They had to cut production, as with other auto manufacturers, but it will be interesting to pay attention because a lot of their sales and their focus has been on China. China has reopened, and so we will keep an eye on Tesla to see if they are able to see any significant or really any sales improvement given the economic environment globally. Here's Apple, nice bullish break back above these shorter term simple moving averages. The company pulled guidance in the middle of February, just again, China as well as sales elsewhere. This is going to be a very watched earnings report. It's going to be after hours on Thursday, listening to management's guidance going forward, primarily because a lot of other companies are going to be impacted. Certainly semiconductor, those companies that provide chips to Apple and other suppliers as well. The list is quite long. Microsoft, these guys are due to report Wednesday after hours. They are seeing a lot of growth in their cloud computing space. We can see this nice gap up here prior to the bear market on earnings, everything to do with cloud computing. It was up 34% year over year. So another one that is going to be closely watched. Facebook due to report, Google as well. I talked about Boeing due to report. AMD is one of the real bellwether leading semiconductor stocks. And you can see, compared to LRCX that we looked at earlier, this stock is in a very bullish position, poised to break out of this nice 2-month base. The company, they're really looking for huge growth numbers, 200% year-over-year earnings, 40% year-over-year revenues. They provide processing chips for the cloud computing data centers. That's one of the hot areas among these semiconductors. So that's earnings season. I did not want to exit today's show without sharing with you some of the ways that you can get in front of small cap areas. And then there's one other item I did want to share with you. So this is called a scooter report. You can access it from stockcharts.com. SCTR is the ticker symbol on that. And what I am doing here is, initially it's showing large cap stocks, but I do want to show you with small cap stocks, what you can do is go ahead and pull up this scooter report. From my work, I am going to want to get in front of those. The scooter report, for those of you not familiar, is a report that highlights the better technically rated, the higher the number, the weather, the better the outlook for that. And so let's take a look at these stocks very quickly. We can see initially it is going to sort it by this scooter. So a lot of these higher stocks that are up here are going to be biotech. This is an healthcare related, very, very active area. And so what I did want to point out to you from here is you can hover over that ticker symbol, and a lot of these are seeing very significant moves. I like to see stocks that are higher priced. So let's take a look at this stock as a, for instance, BTAI. I am not familiar with it, but it is indicative of a number of these underlying biotech and healthcare stocks that are forming bullishly, potentially the right side of the base. And we are going to leave it at that for this week. For those of you interested, please take a look at my MEM Edge report. There is a link below. You can take advantage of a promotional offer and get even more insights into individual sectors as well as top performing growth stocks. Take care.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.